All right, good morning, everybody. Welcome to Trendy Trading. My name is Jonathan. We're going to go ahead and cover this week from the 25th through the 29th of October. And we are going to cover SPY, the Qs, DIA, IWM, gold, TLT bonds, TNX, the Treasury, the dollar, which is your DXY, your SKEW, hedge funds, PCALL, put to call ratio, the VIX or volatility index, and then we'll quickly go over the ES, the NQ, oil, and Bitcoin futures. Let's go ahead and get started with our SPY. So on the left side, just to orient you with these charts, we have the weekly on the left, and on the right hand side, we have the daily. What we're looking at here are my banners. All of these are proprietary to Trendy Trading. This is going to go ahead and look back on a weekly, monthly, yearly, and basis and let me know what the trend is. And trend is very important because we're going to be somewhat biased to that side if things were to break out to the upside and so forth. And if all these banners here were red and they said bearish, then I would be a little bit more biased to going short. Then I'm going to talk about the EMA structure, which are these lines here underneath the candles. And you could see that price candles like to stay above this. And when they do, we typically see a breakout. Okay. Then I'll talk to you again about candle structure if we have any. And then I'm going to give you targets to the upside and then targets to the downside. Very important as we start off this week. You can see that all the banners are green. So we have an extremely bullish trend. So when we have something like this, if we have a pullback or some sort of gap down, I'm actually looking to buy the lower levels, not short. I want to stay with the trend. So in most cases, what you'll find is when we have green banners across the board, you're looking for support levels in any event that we get a pullback. All right, so before we do that, I'm going to go ahead and show you how we trade the neutral strategy. So please listen up. All right, so on the board here, I'm going to go ahead and draw. So this is your candle. We closed here at 452.21 last Friday. We had a slight pullback, and we have a neutral strategy. What I want you to do is take 454 and 450, subtract the two, and you come up with your risk. If for some reason price moves over 454.69, I am long into these upper targets. Now, in most cases, I have several options or equity. And what I'm doing is looking at trimming at the upper levels. So 457.16, 458.90, 461.53. Once I trim here, then I hold on to the position as long as it's staying above these targets. Okay. So once again, I'm going to draw that for you. We're going to zoom in a little bit. For example, if price breaks above here, my risk is below here, especially on a swing. So if I am looking at holding this to the end of the week, so until Friday, then I'm going to stay long as price does not break below the bottom neutral. If you're just scalping on the day, I'll go over that here in a second, but I do like the bigger picture when using the neutral strategy. When price breaks above, I'm long. Once we hit targets here, I will trim. Just to give you an example, this is a hypothetical. Let's say that I had 10 contracts. What I would do here is most likely just trim about 3 to 4. If price breaks above, I'm going to take this stop that's right here, and I'm going to mentally place it up here. I'm going to move it right underneath this stop. So we're going to be right here. Price continues to break, and we move up into T2 here. I'm going to go ahead and trim again, most likely another 3 contracts. Now, most likely, or I should say, what most traders ask, well, what options are you looking at, John? Again, that's personal preference, but what I find is that at the money and in the money is the best way to approach my strategy. Okay, this is where we're going to get the better bang for the buck. I don't want to buy out of the monies just because if for some reason price pulls back on us, we're going to lose that value of those options very quickly. So again, I like at the money or in the money once we break the neutral strategy. All right. So if we get past T2 or T1, it's also okay if you want to take your stops and place them under the targets. And what this is going to do, again, if we take the stop here, we move it up to this area, we make profits in this area. you can take those stops and then move them up underneath as we get above. And what this will do is make sure that you're going to collect those profits no matter what. Even if price comes back and stops you out, you're going to continue to make money, right? You're not going to lose any money from the profits that you already gained into these targets. All right, so let me show you the event that we have a pullback for any reason. I like to draw this stuff out just so you guys can see. All right, let's say that price gaps down tonight. Let's say that tomorrow morning we open up at or around this white line or even this line here. Now, most traders are going to be fearful. What I'm looking at, again, is looking for support levels. So if we open up at a line, then I'm going to coach my team on a smaller time frame, and we're going to look for support. Over here is your daily. Let's just say that we gap down into 447.85. Notice we have a 9 EMA there. Then I'm going to coach my team. We're going to wait for bids or buyers to step in. Once I see that buyers have stepped in, then this process starts from here. My stops go in underneath the support level, and then I'm looking to trade to the upside. Any line that's above price is going to be a trim. In this event up here, we were talking about trimming in this area, but what I'd be doing is trimming into any line that's above price. So one here, one here, one here, and so forth. Okay, so that's how I want to approach going into this week. Now that I've shown you everything that I see on the SPY and how I trade it, I'm going to make it a little bit quicker as we go into the rest of the charts. Okay, so real fast, SPY overall extremely bullish. Candle structure inside and up. This is a very powerful move. We moved above the EMA cloud, and we looked for that after we came into the trendy edge. And so all things do look great for a push higher. Now, we do have big earnings on deck this week, and because of that, the market needs to digest those fundamentals and those forecasts from companies. So I would say that even though we're extremely bullish, we could probably have a choppy week until bigger names start to report. All right, so there is some risk here to the downside at or around this 9 EMA around 447, but also with good numbers and good forecasts, we could see price pushing up towards that 461 level. Okay, again, this is why I love the neutral strategy, because I don't really need to think about what I'm going to do. Remember, these levels, they come from Fibonacci extensions, supply and demand, support and resistance, and so forth, and I put it all together to give you the best levels out there. Let's go ahead and move on to the Qs or the NASDAQ. You can see here, let's go ahead and go over the overall trend, which is still extremely bullish. Here we have an inside and up, and we are above the 9 EMA cloud again. Now in the room for Trendy Trading members, we call this an ACDC. We got this green arrow called an accelerator and the red arrow called a decelerator. ACDC equals ME. So this is going to be our target. So 379.70. Just be careful in here. If we push out of the neutral, I'll be looking at it long into 379.70, but I do expect resistance here. Okay, so I'd expect a little bit of resistance here, and let's go ahead and draw that out so you can understand. Boom, we hit here. What I want to do is go ahead and most likely measure from last week's move into the top, okay, when we start to turn around. And I want to make sure that price is holding about 30% of this move from last week to the high, okay? So just pay attention to that. Again, same thing, we look to reduce position size into these targets and bring those stops up. If for some reason we pull back, I'm looking for support at 370 or 366.92. As long as price is staying above this cloud here, I am looking for price to continue up. Timing is the variable, so we could chop a couple days, but again, if we stay above the cloud, I expect us to push into the upper targets. Overall, looks extremely bullish. Again, earnings are going to be a big factor in this week's move. Over here on the daily, notice we have the 9 EMA, it's in the cloud. And so really we should find support within the neutral. I didn't say this when I was covering the SPY, but listen, if we're in the neutral box, then we stay neutral. All right, just think of it as if I were to change this color of this box, let's go ahead and do that just really quick. We could say, hey, this is yellow. Anytime price is in the yellow, we let it mellow. We're not going to do anything. And this is going to save us from making big mistakes because, again, the probabilities of these levels working are very high. So it's a sit and wait type of position. Wait until it breaks over. Wait until it comes back. Anything that you're trying to do in the middle is going to be speculation. So mellow in the yellow and don't diddle in the middle, basically, is what it comes down to. Okay? So that's the Qs. Let's go ahead and go into the DIA, or the diamonds, which is the Dow Jones. Same thing, overall, extremely bullish. Inside this candle here and up, very nice. Through supply, this is very important. We went through supply, we broke through there, and then our all-time high was just at or around this 356.57 level, and we stalled there. So I like this. We broke out from ATH, then we came back to test that level. All right, and again, if we were to just kind of come across here, let me go ahead and show you. We're going to go right into here. All right, so price pulled back into the trendy edge. We found support there. We pushed up. We got this like little bitty, I don't know, move right above the ATH, and then we came back to test it. And you can see that over here on the right-hand side. We're sitting right above the previous all-time high. Okay, same thing, same format. We break out above the neutral to the top side. I'm looking for a move into the upper targets. Now notice here that I only have two targets to the upside, 359 and 361 for right now. And the reason I say that is because the Dow is kind of a leader here, pushing into all-time highs, and it may want to cool down a little bit while the others catch up. If for some reason we break over 361, I will give you guys new targets. Okay, overall extremely bullish. Just be careful. Again, we're going into big earnings. It could be a little choppy this week. Sit and wait for the exact levels, and then I will execute off of those levels instead of speculating. Let's go into the IWM. Okay, you can see here, this thing is getting really tight. We've been talking, I feel like this is Groundhog Day. You can look at this chart here on the left-hand side on the weekly, and you could say that, once price came into this level around February of 2021, so early this year, price just basically went sideways this whole entire time. Everybody's looking for the big breakout, but let me just, again, let you know that it doesn't have to break out. Matter of fact, we're making lower highs here. We're not making higher highs at the moment. We're making higher lows. Lower highs and higher lows equals a sideways trend. So if you're new at this, you might be thinking, well, what does that mean? Just look at these pivots, okay? See how they're lower each time? So basically, price is not making new pivot highs. So if we were to draw a line there, you could see the slope is down, okay? But here, we are making higher lows, okay? So if we were to draw a line, you could see that it's sloping up. So we're just moving sideways, all right? So just a sideways trend for right now. Bulls need above this previous high over here from 830. So around 229.95, 230. Again, if we break above the neutral, I'm looking for targets 229.89, 230.224, 234.51, and so forth. And again, to the downside, if we were to break down to the downside, I'm looking for support. Overall, extremely bullish. Again, lots of earnings on deck. Could be a little choppy. Wait. Just wait for the right levels. Don't try to assume. Don't try to, diddle in the middle. All right. And you're going to hear me keep reiterating that through today. Let's go ahead and look at gold, GLD. Now on gold, we have, let's see, 1024. We have our drawing set for today. This is a new blueprint. Same thing. Now, gold has not been that great of a trade this year. Notice across the banners, we have a green, a yellow, and a green. So what I see here is the yearly is neutral. So for a long-term trade, it's not that great. For a short-term trade, it's been okay as long as you're trading the levels. Last week's neutral strategy worked into, I believe, T2. So congratulations on that if you also traded gold. Now this week I want something I want to show you that we're just at the cloud. See this cloud here? Anytime price is under the cloud, it's very difficult. It gets very choppy. In a bullish stance, you're going to see candles as they go above the cloud. Example over here, they continue to move up very nicely. All right. Here, we just keep coming into resistance and we just keep stalling. All right. However, instead of looking too deep into it, I just want to trade the neutral strategy. If we break out above 167.85, look for the upper targets. Notice that we do have resistance up above at the trendy edge. Okay. And we had support down here. So I wouldn't expect gold to push over 170.35, but if it does, then things start to look different for the bulls. Then next week, this would definitely be on my radar. Okay, so that's what I'm seeing here on gold. Again, overall, longer term doesn't look that great. Shorter term, it is starting to look a little bit more bullish. On the TLT or the bonds, we're going to come over here, and I did not make a new blueprint for this week, and I do this on several different charts sometimes if we're just kind of going sideways. So here, I want to show you that we have prices just hanging out in last week's neutral. Notice that it did come down into the lower targets and it found support, okay? And then just kind of pushed up. So once again, you're not trying to stay short. You have to be careful. And this is a great example. So if you try to go short last week, notice how it bounced right towards one of our targets. So again, this is why we trim into targets. Okay. All right. So TLT neutral, check out these banners, whole different look, right? As soon as you look up there, you're like, ooh, I see a lot of red. Don't let it scare you. It's just saying that the overall trend for the bonds here is sideways to down, and we all know that, right? So as long as we're staying in neutral, I don't want to do anything. I'm not bullish on the bonds unless the weekly starts to close above the cloud, and it has not done that, in quite some time. Matter of fact, it just did this and went sideways, and then we finally broke down. So if we continue to break down, again, bias for me goes with the color of the banners up here. If we start to break down again, you could see what we call an H pattern. Let me go ahead and draw that for you, where we kind of push up and then we come right back down. All right, so I'd be looking for these targets again and ultimately down here at 140.91. And if we break below this yearly trendy edge, we could see price move all the way down into the 136 area. All right, let's move on to TNX. All right, this is going to be your treasury. Now, I want this thing to cool down a little bit. Every time it pops a little bit, the market gets worried. And you could see that I am keeping, let me make sure, yep, I'm keeping last week's blueprint. Notice how price, even on the treasury, so I mean, we don't trade this, right? We just monitor this and make sure that things are staying cool. But notice how even on the TNX, the neutral strategy works. It pushes up, it hits our target here to 16.7, and then cools back down. What I'd really like to see is that we don't move over 16.7. And even if we do, that we don't take out last week's high. If we don't take out last week's high here, then I think the market could continue to make all-time highs and just kind of melt up. So just be, on. Make sure you're watching this. All right, I'm going to go ahead and create an alert here right above. So it's going to be right there. And if we start to break out above that, I would be cautious into big names like tech and so forth. All right. So again, that's TNX, and you can see it says extremely bullish. I wouldn't say that's a great thing. Let's go ahead and move down here to the dollar. All right, so I have not made a new blueprint on the dollar. That's because this one keeps working. I want to back up this chart and just show you this is where these Fibonacci's are coming from. Okay, so from this 102 area on the dollar, and then we just kind of making our way up here. We're making higher lows, and we're trying to trend up in what we call a down range. This is a down range. We're trying to trend up in a down range. Notice at the 38.2, this is very important for us. It cannot get over that. So I keep saying week after week that the dollar is basically neutral to down, neutral sideways, until we can get the dollar over 94.491, then things start to look different. So if we have the TNX pushing up on the treasury, we have the dollar moving up above this 94.49 level, then I would say definitely raise the yellow flag and red flag across the market, as we could be looking for a pullback once again. Okay. All right. So then we're going to go into the SKEW. All right. SKEW, make this really quick. You can go to Google, look this up if you don't know what it is. Basically, this is our hedge funds, and there's risk on and risk off in the market. As the SKEW drops, we start to think, okay, this is when there's fear in the market. Okay, so if I were to put a chart in the background of the skew, and let's just make it, I don't know, pink, and this were the SPY, what we'd be seeing as the skew drops, we're seeing the SPY drop as well, okay, in the background. So the market is dropping, and people are getting fearful. And down here, you would see the more that the market drops, the more I start to think risk on. That means I start building positions and putting more money into those positions for the upside. Timing is the variable though. So typically what we're doing is we start buying a lot of time. Now, the skew did come down here towards the 131 level, and I started to buy 90 plus days out on my swings, okay, and my options. And my idea here is every time the market pulls back a little bit, if I'm not fully allocated, I'm adding into the swings as the skew has come down into these areas. Now notice I have annotations here: chop, iron condors, risk on, and so forth. These work really, really well for me. So just understand that we closed around 139 this week, and for me, that means chop. Okay? So this makes sense going into earnings, and everything I've shown you on every chart and what I've said could be true. The market is waiting for data for those points after earnings to kind of give us an idea where the market wants to trend to. All right? So again, this is what I'm looking for in the skew, is just a little bit of chop for now. Okay? All right, put call ratio. This is basically how many people are on the put side versus the call side. Overall market right now is pretty neutral. And that makes sense also going into earnings. So your big time investors, retail investors, they're all kind of sitting. They're having fun day trading. But as far as like being convinced where the market's going, I think that a lot of traders are just kind of right in the middle. Which leads me into the next thing called the Fear and Greed Index. Our Fear and Greed Index, you can find that on Google. You go to money.cnn.com and find out that level. Right now, it's actually showing 67, which is greed. All right, so 67, which is greed. So this is saying that retail, that's you and I, for the most part, we're being greedy. The market's pushing up, and we just keep buying calls, right? So when that happens is a great time for the market to have a rug pull. You know, you want to catch everyone off guard. You want to get them when they're greedy. However, big point here, this year, extreme fear versus extreme greed has not happened but maybe once on each side. And because of that, I'm very neutral. If we were extremely greedy, things would be a bit different. So what I'm saying is we have some room for the market to continue to move up. I would not be put off just because we're sitting at a number 67 out of 100. Okay? Just like we're not at extreme fear, we would still have more room to move to the downside. So again, overall, I feel very neutral looking at everything I just showed you. Okay? Everything I just showed you. We're going into earnings. Everything looks bullish from SPY, Qs, DIA, IWM. However, we're coming into earnings. So again, neutral strategy is very important for this week. Next, I'm going to be looking at the VIX, or the volatility index. And you guys all know this is pretty straightforward for me. What we were finding here on data points is that about 1.5 to 2 weeks is when you want to start setting up for that next roll into a volatile week. Okay, so you can see we came into neutral. Okay, we stayed there. This is your next week, which is 2 weeks. And we could be seeing a little bit of volatility if we start to break down below 1427 and 1321. So in here, notice that I have two different cautions. All right. So when prices start to spike, or the volatility, starts to spike above this blue, which is around 20 bucks, then we are, looking for a lot of volatility in the market. When the volatility index drops into 1427, 1321, we start to think we are going to see volatility soon. It's almost like that support and resistance thing, right? So right around here, if we do break down below there, just be cautious. I'm not going to trade the VIX. I would much rather pull off on my longs and put some SPY puts on. That's just me. All right. So create an alert at or below that 1447 area. Actually, I want to pull this down just a little bit. So about right there at 1432. All right, so this is going to let me know if we break down below there. Just look for the market to maybe come into a little bit of volatility. Looking at this tells me that if we pull back into my areas to the downside, the market can still slowly melt to the upside. Okay? ES futures. All right, these are very important, folks. And if you haven't heard it enough, I'm here to remind you that Trendy Trading is unique. And outside of all other services, um, we do things a little bit different. We're able to forecast. That's why you're listening to what I expect before it happens. We're using supply and demand, Fibonacci extensions, and so forth. And just to give you an idea, I put this chart together for my team in December of 2020. And I projected, I have not changed this at all. Projected extension for 2021. I can't make this up. So price was down here towards December. We were sitting at around 3592, and we projected every one of these levels. I said price would move into 4197, pull back a little bit. It did that. It then pushed up, and lo and behold, we are sitting here at my 2021 projection. Just this projection and this blueprint alone is enough to make somebody's year. So here we are. What happens now? Price is just hanging out. We're holding the red box. Remember, I call this the bear house because they can let you in the door, but at any time they can kick you out. So how do we approach this? Really, at the end of the day, there's a couple notes that I want you to take into consideration. The monthly is currently extremely bullish. Expect a breakout above the monthly high. Okay, basically what I'm saying is last week's high. All right. Uh, Obviously, earnings will move the needle for a bit, but above 44.80, things are really bullish. Weekly, over here on the right hand side, let's go ahead and change this so you can see. This is two different blueprints, okay? So don't get them confused. This was my 2021 outlook for my members here. And then on the right hand side, I like to give a weekly by month. All right, so the chart's good typically for a whole entire month, and I give a green box and a red box. Now, these are new levels for us, so we're excited because we see how much the red and green box work. Green is where I expect buyers to step in, red is where I expect things to slow down for us, okay? So, looking at the weekly, continuation off the inside and up and a stall after hitting all-time high. That's really normal. We hit all-time high last week. Psychologically, things pull back. That's just the ebb and flows of the market. So don't look into it too much. Again, have earnings. All right, so we are not extended above the EMA cloud and currently holding the monthly edge. New green and red boxes. Earnings will have a temporary impact. Overall, if 44.64 holds on the week, then things look really good. Let me go ahead and point things out to you. Inside and up, this is your trendy monthly edge, 45.20. And again, this is a big line in the sand for us for the remainder of the month. If we stay above here, I am expecting a move into this red box here and then sideways action. Again, this is ES Futures. If you don't trade ES Futures, come and hang out with us. I'll be happy to teach you. I trade the futures primarily almost every night for a few points to the upside or downside, and I have a nice little intraday that we trade, but we can trade the green box to red box as well. Again, ES for every 10 points, you're looking for $1 in the SPY. So you can use the blueprint of the ES to trade the SPY. All right, let's go ahead and move on. We're going to look at the NASDAQ. So this is your tech, and this is futures, and I want you guys to take a look at this as well. And let me get this set up for you guys. We have, let's go to default here. Let's see, we have July month, June, May. All right, so here on the monthly on NASDAQ, notice how we're hanging above the 9 EMA. We have an inside and up over here. So this is, in any event, if the tech really pulls back and we start to get a lot of information where the market's pulling back and we're concerned, this right here is going to be a big buying opportunity for me. Notice that the trendy levels are also giving us indicators to the upside. And you can see that by looking at the green arrows. Again, these green arrows are proprietary buy indicators for trendy trading. I love it. Really, at the end of the day, we could just follow these green arrows, and you can see every time these have popped up, this has been a great buying opportunity over here in the NASDAQ. On the monthly, again, it's holding this EMA cloud, and that's a good thing. All right. All right, let me check one thing. Here we go. October weekly. We want to make sure. Here we are on the right hand side. Now we have moved from the green box to the red box. For anybody that might be questioning this, what we do is we commit to the candle. So if this is a weekly candle, which it is, you have to wait until the weekly candle closes. So for example, you might see this line here at 14,432, and you could say, well, man, price went under there. I thought maybe the green box wasn't going to hold. Sure, on Thursday that could have been the case, but again, we're committing to the time frame that we are building these blueprints on, so you have to wait. And notice price then rockets back up. This is the trendy edge. We build, we round out here, and then we did push into the red box like we projected. And again, we put these together quite some time ago. So what happens from here? Well, basically, I want to see 15,277 hold. This is an ACDC, just like on the QQQ chart I showed you. And we are looking for 15,591.4. Overall, it looks extremely bullish. We do have some headlines out there that are temporarily pulling price back in some of our favorite tech names. But just remember, levels before news, okay? Let's go ahead and move down to oil futures. I'm extremely bullish on oil, and it breaks my heart because that just means that it's going to cost more money to put into your vehicles, your boats, and anything else that you might have. But listen up. This is a monthly chart on the left, and this is what I'm looking at. Apply your Fibonacci's. It's very straightforward. Around the 50, okay, 7701, we came back and tested this two times. Back here in 2019, and then we came back here in 2021, and now we broke through. So this is the floor. That's how I look at it. 7701 holds. We are looking for the golden Fibonacci ratio, which is the 618, which gives me a target of 93.52 roughly. This is what I expect, folks. And from a supply and demand formations, if I look over here, this is confluent with that area. It could, maybe it doesn't get quite there, but somewhere between 90 and 93 is definitely what I'm looking for to the upside. Okay, over here on the right hand side, this is a new blueprint for our weekly. We have a green box. You could see that it's almost confluent with this 9 EMA, but I want to show you guys minor support for this week is 82.92 by 83.73. My targets for this week, if we continue above these levels, are going to be 86.27 by 90.26. I am long in oil futures, and I'm long by options. So I've been trading this at night, making some money there, and I've shown you that here in the room, but also out there on Twitter, just showing you guys how you can make money here using the trendy indicators. But long term, I am long options here, and those are doing well. Okay. Over here on the Bitcoin, let's go ahead and talk about it really fast. We hit the all-time high like we were expecting. I removed the old blueprint, which is okay, and that worked out very, very well. It was like perfect. And now, guess what? We have a new blueprint. That actually excites me. So this is what we're looking for. We got a green box down here by 52,000, by 42,000. You can see the exact numbers. I expect support to be here in this green box. The neutral, kind of like the oil, is what my temporary support is. The only thing I don't like on the weekly is a topping wick. Typically, a topping wick that looks like this is your first sign that the market's going to slow down and go sideways. That's okay. We can't expect it to go up every day, but also it's an inside week, and I love inside weeks. So if for some reason Bitcoin starts to break over the 62,984 level and then takes out the previous week, I do expect it to move up here towards 74,000 by 83,000. All right, so very big deal. Bitcoin has been moving nicely, and I love to use all of these future charts to show you that following the levels makes trading a bit more easy. But trading is not easy, and I want to leave you with those final thoughts. Trading is absolutely difficult. There's a lot that happens between your ears that can keep you from making the right sort of trade. One thing that Trendy Trading really focuses on is allocation.
understanding sideways trend versus uptrend versus downtrend. Is it time to buy support? Is it time to get out? Is it time to reduce position sizes? There's a lot of that going on. All right. And if you don't know how to read the market, it could be very difficult for you. So please pay attention to overall trend, wait for levels, stay patient, and things can get easier for you. If you have any questions, please reach out to me. Don't forget to go to trendytrading.co, check out our free blog, and again, you have to come check out the trial to see everything that we offer here. We're one of a kind. We really appreciate you. We value our members. We can't wait to trade with you. See you soon.